To continue, Singapore just said, guys, I hate to say this, this is big news. JP Morgan just said $2 trillion could be injected into the US banking system by the Federal Reserve's emergency loan program. That's 20% off the balance sheet, a huge buy signal. And here we go again. There is some pushback. Chicken Genius. That's a misleading pump. That money will never make it into the markets. And I'm not sure about that because you have to see this first. This is an article from Bloomberg and we need to get through the whole thing. Market observers are on alert to find out just how much extra funding the Federal Reserve's new backstop program will ultimately add into the system, with analysts at JP Morgan Chase positing that it could inject anywhere up to $2 trillion in liquidity. So this is not a certainty, but when you read what's written below, you will be like, whoa, okay. That's their maximum estimate. So 2 trillion is their maximum estimate. The analyst's prediction based on the amount of uninsured deposits at 6 US banks that have the highest ratio of uninsured deposits over total deposits is closer to 460 billion. That's a smaller amount, but still enormous compared to historic usage of a so-called discount window, another Fed facility that is often seen to carry a stigma and has historically involved banks taking a haircut on the amount borrowed relative to collateral. And we are about to find out exactly what the figures are going to be that have been already used by this program today. So by the time you see this video, that may have been out already, like moments after. Another strategist is saying the usage of the Fed's bank term funding program is likely to be big. While the largest banks are unlikely to tap the program, the maximum usage envisaged for the facility is close to $2 trillion, which is the par amount of bonds held by US banks outside the 5 biggest, they said. So it's not just JP Morgan saying that. It's also other people, and maybe they know something because, people talk. They know some people in the government, and people in the government design these programs, and they're like, oh, there's something going on here. You may want to take a look. But yeah, we'll see how everything turns out. We'll know very quickly, but seems like it may be quite interesting. And the big mic drop is towards the end, and we're getting close to that. While there are still $3 trillion of reserves in the U.S. banking system, a significant proportion of that is held by the largest banks. The JP Morgan strategist wrote, of course. That's why a lot of people are moving to bigger banks if you want to make sure that your money just does not go. Tighter liquidity has been caused both by the Fed's quantitative tightening and also the rate hikes that have induced a shift to money market funds from bank deposits, they said, because banks are not paying much, but you move your money over to a new account and boom, you're making a good yield now. The bank term funding program should be able to inject enough reserves into the banking system to reduce reserve scarcity and reverse the tightening that has taken place over the past year, the JP Morgan strategist wrote. Luke Crandall appears to be more circumspect about how quickly banks will ramp up their funding from the new facility, but he also drops quite a surprise for, I think, many of us. His reserve balance projections assume that combined activity at the discount window and the new bank term funding program rose by roughly $100 billion over the past week. That would take it above the discount window's previous highs for the year to levels last seen amid the pandemic-related upheaval of 2020. And watch this. Our guess is that the new program will be attractive to a large number of institutions beyond those currently facing liquidity questions, Crandall wrote. We expect the advantageous financial terms of the new program to overcome stigma concerns of many institutions in the weeks ahead. However, the speed and magnitude of the run-up in Fed lending is highly uncertain. But look at what he is saying. The new program will be attractive to a large number of institutions beyond those currently facing liquidity questions. This right here is stimulus. This is not just, we are going to only help these institutions that are in serious trouble. This to me sounds a lot like stimulus. And it's really interesting how we might go from basically $25 billion that were originally allocated for this program to now hundreds of billions of dollars allocated to this whole thing, and maybe even a whole lot more, according to JP Morgan Chase. The market's almost closed, but not quite yet, but everything looks pretty green today. And if indeed they have so much money injected, this could possibly be very bullish. We will know fairly quickly if this indeed is actual stimulus, or is this stimulus as real as this picture right here, which is all AI generated. So yeah, we live in very interesting times right now. Very interesting times. Chicken Genius also made some good calls recently. He bought Palantir at 742 basically. That's a nice return of about 8%. Someone asked Chicken Genius, did you do this? And Chicken Genius says, shh, SEC is gonna come after me. Tesla's total market cap is huge, $576 billion currently, but Palantir, on the other hand, is only $16.8 billion right now. So could that move the stock a little bit? Perhaps, maybe. This tweet originally did get a lot of views, 300,000 views, but I don't see a problem here. Good call by Chicken Genius. That's a nice number of shares that Chicken Genius has. It looks like Chicken Genius also made one more good recent call about Charles Schwab. He said, you are far safer putting your money in a brokerage versus a bank. I'm getting a few messages about the risk of Charles Schwab. Apparently, some idiots are spreading FUD. First, I'll put my money where my mouth is. They go short, I go long. So I would assume he bought some, although that is not a very direct confirmation. I assume he bought some. I'll Jim Cramer them. Why? Brokerages are not banks. Brokerage assets are segregated from banking assets, except FTX, SIPC 400,000 plus FDIC 250,000 plus insurance access of 100 million. FDIC insured deposits at Charles Schwab are among the highest in banking, plus minus 80% versus plus minus 3% fully insured at Silicon Valley Bank. If we assume that Chicken Genius opened a position right when the market opened on March 13th, so somewhere right here, right now that position would be up 12.5% roughly. And if timing was even better, then that could be a nice gain of about 23%. Nice. And even the CEO of Charles Schwab bought $3 million more worth of stock in the company. The market was panicking because there were some unrealized losses, but the situation is different here. For example, the CEO is buying the shares in the company instead of selling them as fast as possible. Overall, certainly nice to see that Chicken Genius is now more bullish. This was just now on March 7th. We went from this to now being more bullish. Chicken Genius also made more calls during this time. Some were good, some, well, let's see. He said on March 9th, I'm bearish, but the collapse of Silicon Valley Bank is not going to cause other banks to go under. Since 08, 09, banks are strapped up so tightly, most are extremely well capitalized. Credit Suisse at 12%, JP Morgan at 19%, not going to happen. Still monitoring liquidity, it's drying up. In one day, Credit Suisse suddenly dropped about 30%. And then it jumped back up, although not completely back to where it was before. But this happened when the Swiss National Bank basically gave it a bailout, or agreed to basically give it $54 billion. This is specifically a credit line, basically. I wonder if they are already using that credit line. Perhaps, I'm not sure though. On March 11th, Chicken Genius, though, did say that there's a 35% chance that the contagion spreads and there could be other banks failing, I assume is what he meant here. So just keep in mind, if you do follow Chicken Genius, he does make trades, and that is great if they work out. He did great here. I mean, he did great with his recent trades with Palantir, and assuming he bought Charles Schwab, he did great there too. And here's one more trade that Chicken Genius did on March 13th. He is still bullish on Ethereum as well. But also remember that Chicken Genius said this is not the bottom of Tesla stock on December 27th. So right here, and yeah, I mean, he was right. Tesla stock did drop a little bit lower on January 3rd. So yeah. On the other hand, here's a screenshot of me, December 27th, as you can see right here. I was pretty excited about that Tesla stock buying opportunity. Where does he think Tesla stock will go now? Does he still think that $60 per share is actually possible, or is he more bullish now and he is going to buy more Tesla stock? Because overall, this seems to be pretty bullish news. I'll be following what Chicken Genius does, and I will report to you if he does become bullish on Tesla stock again. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.